All right, welcome to Talkin' Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk to you about a small cap, high growth streaming service that I think stands a very good chance at potentially 4xing or 5xing in the next 12 months. They released their earnings report a few weeks ago, and there was one particular thing in there they said that if they can accomplish, I think they have a legitimate chance of doing this. Please remember to subscribe to the channel and hit the notification bell. Also, if everybody would smash the like button, we'd really appreciate it. It's a big help to the channel. We also have a link in the pinned comment below to our free Discord. So the first thing to know is this stock is down approximately 94% from its all-time high, which was about 16 or 18 months ago. It's very infrequent for a stock to be down over 90% unless it's somewhat imminent that it's going out of business or it is believed highly likely to be going out of business. So the stock that I am talking about is CuriosityStream, stock ticker CURI. They're in the same genre as like the History Channel or National Geographic. You can see here thousands of documentaries all on demand, all for less than $20 a year. So they have several different packages. If you want to find out more information about this, you can watch my previous video. For now, I want to take a look at the stock itself, and then I want to look at the earnings report, and we'll talk about what they did and what they said that makes me think they have a very good chance of making a comeback. Now, I have to always say this is not financial advice, so please do not go out and run and buy this stock just because I said that I like it. You've got to do your own due diligence, but I'm going to show you a few things that might lead you to believe that you want to add this to your watch list at least and take a closer look. Okay, so I'm making this video before the market opens today on June 1st. So yesterday, CuriosityStream closed at $1.51, and you can see that puts them at a market cap of $79 million, under $80 million. So I want to show you a chart of what their market cap has been over the course of the last year, because this is just a few pennies off of their all-time low. And again, this is down almost 94%. January and February and a little bit of March of 2021, the entire small cap high growth sector was way overbought, and almost all of these stocks crashed down from this point. So that's why I'm not arguing that it's going to get back to $1.1 billion, because remember, it's at $79 million right now. So in order to get back to its all-time high from here, it would have to 14x, and I'm not even looking for that to happen. If you ignore this period of time, you'll see that just back in December, this was a $330 billion company. So that would be a 4x right there. So that's kind of my thesis on this. I'll show it to you on the chart later, and then I'm going to talk to you now about why I think that could happen. So the first thing I want to point out is this is another one of those companies, although it does not have a negative enterprise value, its enterprise value is very close to zero. So the market cap of this company is $79 million. Their cash in the bank is $82.7 million. Their debt is approximately $5 million. So you can see their net cash is almost identical to their market cap, which means basically they're valuing the rest of the whole company at zero. So these are opportunities that I like to look for. If this company has a plan and they can move forward, starting from a valuation of zero leaves an awful lot of room to the upside and not very much room to the downside. Now, obviously, the ultimate downside for every stock is that it goes to zero, and if these guys can't make it and they go out of business, I suppose that would happen. But I'm going to take a look at the other scenario right now. So let's go to their earnings release. CuriosityStream announces first quarter 2022 financial results, May 12th, 2022. I'm going to go down here to this summary section. First quarter 2022 financial results. Revenue of $17.6 million, up from $9.9 million in the first quarter of 2021. So that is significant year-over-year growth. This is a high growth company. All these online streaming services have taken a big hit since Netflix reported earnings. Really, on the last earnings report, they actually reported that they lost subscribers in total. Now, obviously, Netflix is the most mature out of all the streaming companies by far. So they've reached a certain point of market saturation, and they have some of their own issues that are specific to them. CuriosityStream is at the absolute other side of this spectrum. They are one of the smallest streaming services, and they are still in a very high growth phase. You can see they increased their subscribers by over 50% in just 1 year. Total paying subscribers of approximately 24 million, up 50% over last year. So they are growing their subscribers at a rapid pace, and that is what you want to see, obviously, out of an online streaming service. Now, I will tell you as an aside, all these online streaming services have taken a big hit since Netflix reported earnings. When a stock like that gets taken out, it tends to bring a lot of other stocks down with it, particularly those that that are in a very similar or the exact same line of business. Okay, the next, gross profit of $5.8 million compared to $5.7 million in the fourth quarter of 2021. So their gross profit was fairly similar year over year. They did have a net loss of $15.9 million compared to a net loss of $18.8 million in the first quarter of 2021. Okay, I'm going to go up and read these bullet points at the top because it's one of these bullet points that I feel is extremely compelling, and it's the reason I think they may be able to turn the corner and really have a big push if they can do what they say they can do. Okay, so the first bullet point up here, first quarter 2022 revenue, $17.6 million, up 77% year over year. So we talked about that. That's a very nice year over year growth, but it's this second bullet point right here that I think means everything. Establishes new financial targets, including a positive cash flow from operations in the first quarter of 2023 and a minimum balance of $50 million in cash, restricted cash, and available for sale investments. So they're looking to have liquidity of $50 million, and in addition to that, be net cash flow positive from operations in the first quarter of 2023. So right now we saw they have about $83 million in the bank. They have more than a sufficient cash runway to get them to the first quarter of 2023 and beyond. But if they can get there with $50 million in the bank and turn cash flow positive, that will really be a turning point in this company. That fundamentally changes this as an investment proposition. One of the biggest things in a small cap high growth company is how much of a cash runway do they have, and at what point in the future are they going to be cash flow positive? They need to reach cash flow positive, and they are saying right here that they have a plan to do so. So obviously they need to continue at their growth rate and they need to move towards profitability. If they can start cash flowing in 2023, then they're no longer on the clock, if you will. Time is on their side and this investment can grow. And obviously the investment community knows that. So in addition to that, hopefully over the course of the next year, at some point, sooner or later, we will get out of this massive risk-off environment that we're in. This is one of the most risk-off environments I've ever seen in the stock market. In a risk-off environment, these small-cap, high-growth, early-stage companies are the ones that get beat up the most, and you can see that they have. They only have 52.8 million shares outstanding, so, in the long run for this company, that's a good thing. They have not done a massive amount of dilution. They then had a final comment that they're announcing their intent to expand distribution and promotion through additional free ad-supported streaming TV or FAST channels later in 2022. So this is another potential line of revenue for them and potential additional growth. Let's take a look at their chart and see how they can potentially get to the points that I'm talking about. All right, this is Curiosity's chart on the 1 week time frame. So that I just wanted to zoom way out to show you that here is last February. This is February 16th, 2021. On that day, they hit exactly $24. So that was their all-time high. And again, this was a SPAC prior to that, so it was drifting at 10. You can see it raced up somewhere in here. Obviously, they identified Curiosity as the company they were going to be merging with, and this ran up to $24. Okay, so as I often like to do, I'm going to cross this section out. We're not even going to talk about getting back here. So if I run the math, you'll see from $24 down to where they are right now, that's about 93.5%. It's actually about 93.7 had I done this just perfectly. So almost 94% down from its highs of just over a year ago. But I want to look at two other numbers real quick. Let's ignore all of that and go all the way down to $13, where it was in August of 2021. So from that point, from August of 2021 until now, this company is still down 88%. But let's go even forward from there. If I go back just about 6 months ago to November 22nd, 2021, this stock was trading over $8. So in the last 6 months, this stock is down 80%. It's down 94% in total. It's down over 80% in the last 6 months alone. This is why I believe these are reasonable price targets. Up until this week in November of 2021, CuriosityStream had never traded below $8 in its history. So to me, it is realistic to think that if they turn things around, they get cash flow positive, we get a little bit of a better risk environment in the stock market, that they can get back to what was a very strong line of support at $8. Once they cross this $8 line, it's been down pretty much in a straight line since then, and they've never gotten back anywhere near it. They are still falling. They were a few pennies off of their all-time low today. So obviously the first thing that needs to happen is they need to stop the momentum downward, and they need to start showing the marketplace in the next quarterly report that they're moving towards this cash flow positive scenario. So the first measurement I'll make is from May 31st, yesterday, back to December 20th. So that's approximately 5 months. So this company would 4x. It would be up 325% from roughly $1.50 to roughly $6.24. So that's a 4x right there. And then to get back to where they were just 1 month before that, on November 22nd, that would be a 419% increase in the price of this stock. So there's your 5x. So that is why I think it is reasonably possible for this company to 4x or 5x. Again, please, this is not financial advice. I'm not telling you to buy this stock by any means, but I do think it's one that's interesting. I think it should be on people's watch list. So please do your own due diligence, because obviously you can see that this stock is down 94%. So in many ways, this stock has been a falling knife for the last year, and it really still hasn't bottomed. It's still hitting 52-week and all-time lows right now. However, I'm presenting a bullish case that could potentially occur if they can do what they said they're going to do, because once they are cash flow positive, they are no longer dependent on the market. So even in the event if they're not able to 4x or 5x, this still seems like a very good risk reward to me. You know, even a 2x is a fantastic return on investment over the course of a year, and I don't know how much more downside there is left. They're basically already valued at zero from an enterprise value standpoint. So the downside, I think, has some reasonable limitations. The upside is large. So that's the risk reward type of equations that I like to look for. And again, there's no guarantee, but I like the risk reward equation. So this is a stock that I do hold. Again, please do your own due diligence before you make any buying decisions on this one. It's a very, very volatile, risky stock. So that's my take on CuriosityStreams. Thanks so much for watching. If you made it this far, please remember to subscribe to the channel and to smash the like button. Thanks again, and we will see you in the next video.